Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is business credit expert Ty Crandall. Now, Ty currently serves as the CEO of Credit Suite. Credit Suite is an advisory firm that consults with and advises companies on business credit building and scoring. He has overseen the business credit building for thousands of clients and has helped create and grow the most credible business coaching operation in the U.S. Now, Ty is also an internationally known speaker, author, and business credit expert, and is also the author of two of the best-selling books on consumer and business credit. These include Perfect Credit and Business Credit Decoded. Now, in addition, he has also written hundreds of published articles related to business credit. So, guys, without further ado, I'd like to welcome my good friend Ty Crandall to the show. Ty, my friend, how's it
What's up,
going?
Kevin? How you been, man?
Yeah, life is good. Life is good. For those that are watching the video, it's backdrop there. It's downtown Tampa. So funny enough, I was on Ty's show a few weeks back and didn't realize that we both lived in somewhat the same neck of the woods. I'm a little bit further west, but basically the Tampa Bay area. He's in downtown Tampa. I'm over in the Clearwater area. So small world that we live in here. But with that, Ty, I'm excited to have you here, buddy. You got to grill me and ask me all the questions that your heart desired when you had me on your show as a guest, and I get to do the same for you. So with that, we're going to dive in and talk about just your business and the different services you guys provide there at Credit Suite. But I'd say before we go down that path, how about let's back it up a little bit. I'd like to get a little bit of the backstory and the foundation of just who you are, kind of your background, where you came from, and how you found your way into this world of business credit. So with that, please, if you would, fill in the blanks for us and tell us a little bit more about yourself.
Sure. I grew up in a small town and joined the Air Force to kind of get out of the small town, and didn't work, Kevin. They put me an hour and 50 minutes from my hometown in Indiana and Ohio. So that was a horrible decision.
Oh, that's
But
funny.
anyways, it was really fun. I had a good time in the Air Force, got out. And then really the first business I ever started was in the mortgages. I really realized I liked finance, I liked sales. So we got a job with a mortgage company, a buddy of mine, and just killed it. I was producing more than everybody in that office combined. And it came time for me to start my own, launched my own mortgage company, seven-figure business, a lot of blood, sweat, tears to get it there. Then the mortgage crisis occurred, and it was like a very horrible joke that took place. And then what I did overnight and my niche in the industry, jumbo loans, basically went away. So I kind of saw what it was like firsthand to build a successful business and then go through the failing of that business, eventually having to shut the doors and try to pay my personal funds to employees as long as I could, and then eventually just had to shut everything down. But unfortunately, I personally guaranteed a lot of my business debts. I think a lot of entrepreneurs do. I didn't know anything about business credit at the time. So then that just carried over to personal. Business debtors came after, took all my personal assets, put everything on my personal credit reports, ruining my personal credit. So it just created this massive financial mess. I had a failed business, and then financially on the personal side, it completely failed. And then was just started the process of trying to recover from that. Got into consumer credit and really wanted to try to help people recover from what I was going through, and started to build another very successful business in the consumer credit space. And then enough of my clients asked me about business credit, where I kind of Googled the answer because I didn't know. I stall enough to Google the answer to try to act like I knew what I was talking about, but I really didn't. And then eventually I was like, oh, I got to really figure this out. And so when I started to dive in and realize business credit would have saved me, if I wouldn't have personally guaranteed the business debts and did it the right way, it wouldn't have personally taken me down when the business failed. And I decided I just wanted to do something about it. So I just kind of in real time started learning about business credit. And then I would just do these live streams on YouTube. Before Periscope was even around, let alone before TikTok and any of that. And then before long, I was like, I gained a big following, and we ended up, building a company. And so that brings me where we are today. We've helped like over 50,000 clients successfully build business credit. So we just celebrated our 10-year anniversary last month, which is pretty cool. And that kind of brings me forward to where we are today.
Yeah, no, fantastic. I appreciate the background. I've also got somewhat of a background in the mortgage industry. I owned a mortgage company during the heyday, 2002 leading up through 2000. I did sell out to my partner at the time. Didn't know that the crash was going to be as dramatic as what it was, but sold out like mid 2006. And so I'm not going to say that I actually knew that it was coming. It just got lucky with the timing and was able to get out of there. However, I owned a bunch of real estate, so I didn't get out of it unscathed at all. I just got hit on that one side versus on both sides of the table. But in any event, I'm very familiar with the credit challenges that ensued thereafter, basically losing a lot of my business, basically all my business and all the real estate, all of it being personally guaranteed, and just so I completely understand the situation that you were in, and ultimately the challenges that were associated with it. And so, maybe just for those that are unaware of how business credit really should work, right? Like, so the one you basically were going through your own challenge, realized that other folks had the similar challenge, realized that, gosh, you shouldn't have tied, your business and the business loans and the business credit that you had to your personal social security number. So maybe just let's unfold that a little bit, and provide, if you would, provide a better understanding of what business credit really should look like, and maybe why most people get it wrong.
Well, we'll start with why most people get it wrong. I think that, one thing that's interesting in being an entrepreneur, as long as I have it, I'm sure you can relate to this. Everything costs at least twice as much as we think it will, and takes twice as
Mhm.
long as we think it will to get done. And so I think as a starting entrepreneur, we make that mistake. We come in, we try to assess, how much it's going to cost to launch a business in that time frame to make money. And we always get that wrong. And so your typical business owner starting a business, 75% statistically are using personal funds, using family member and friends, using personal credit to do it. The problem is consumer credit was never designed to fund a business. Like the limit that you and I have on our personal credit cards, although it may be high, is not designed to fund a business. It's designed to fund our individual or personal lives. So what a lot of business owners do is they start launching the business, they use their personal funds, they use their personal credit, they quickly overutilize that credit, start damaging their personal scores, burn a lot of their cash, realize this is going to be longer and harder than I thought to start making money. And then at that point, they kind of get themselves in what I call financial checkmate, which is where now it's harder to get loans, it's harder to get credit lines, it's harder to get anything because your consumer credit scores are down, your utilization is too high, you're more of a desperate situation because you burned a lot more cash than you thought you would
Yeah.
burn. That's a typical scenario I think a lot of entrepreneurs go through. And this is just what happens when we try to use consumer credit to fund a business. It was just not designed to do that. Now, if we look at the other side of the coin, business credit exists. 90% of business owners know nothing about it statistically. 47% more likelihood to get a loan approved if we do understand business credit and how it works. So it's like there's this whole other world out there that large companies know about that we don't. And that's it. Small business owners just don't. We're not privy to how the business credit system works. So, but business credit was designed for that purpose. It's kind of designed for your business to fund itself, to be able to separate consumer and commercial credit. The limits are way higher. It's easier to get. It's designed for a business owner to be able to get that and use that to fund the business and not touch the personal credit. So business credit, like consumer credit, it's credit for a business where it reflects a business's ability to pay its bills. Your consumer credit report reflects your likelihood to be able to pay your bills, right? You use your consumer credit to get real estate, car loans, credit cards, and loans. Business credit's exactly the same way. When you build business credit, you can use it to get business, commercial real estate. You can use it to get commercial loans and credit lines and business credit cards. So really that's the biggest disconnect I see is I think a lot of
Yeah.
people try to use personal credit to fund a business, not use business credit, but it literally is what business credit was designed to do, is to be able to build a credit profile, build a credit score, use that to get more and more credit without liability, and then use that credit to basically get your business to fund
Yeah.
itself.
I get how that would work with an established business already, but help us better understand for someone that's just starting a business, and using the example that you gave in the beginning, that typically someone starting a business, they're going to use all their personal funds, their personal credit cards to help us get that business established, and then ultimately find themselves in a different bind because now they've over leveraged themselves, their credit scores being damaged because of overutilization, what have you. What should that individual had done? That's just getting started with this new whatever the category it might be in, but it's a startup business. It doesn't have a track record. It's not really established. How does that individual get started?
Well, it's interesting because I like to start when I'm on stages, and I talk about this guy Sam that actually started a business. He was in retail. JCPenney's was the first job he ever had. Loved retail. Went to serve in the war. Came back. Got money to buy it for his first franchise. Bought it from his father-in-law. Started it. Needed money, so what he would do is he would basically go out and get credit lines from vendors to put the stuff in his store. And if you ever read his book, he talks about the very beginning of his business where he knows that person's going in the back office to pull his Dun and Bradstreet to determine if he's going to get a credit line. He hopes they will because he didn't have the money. And then they give him the credit line because he's established in business credit. He uses it to actually buy stuff and fill the stores. And then ultimately went and started his own store, right? And then, ultimately that became what is Walmart, right? That was Sam Walton's how Sam actually started his business. And if you look at Walmart's model, what's interesting is that 80% of what Walmart has on their shelves, they're using business credit to buy. Now, I know we're talking about a very big company, but I think it's interesting because somebody like this started with nothing, didn't have money, used business credit to build Walmart. And I have never, in of 10,000 plus credit reports, seen as many accounts on a credit report as what Walmart has, because they are now the number one retailer in the world, 10,000 locations funded by business credit. Business credit has more value in the company than all shareholder value combined. So that's the epitome of what you can use business credit to do from startup to growth. So if we bring it back down to a small business level, even a startup can get this. It's just a matter of following a series of steps. The first is to know it exists. The second thing is that you really want to set up your business where you're legitimate, where you're credible. And I see a lot of business owners make this mistake, is that they don't set their business up where it looks fundable from a lender or credit issuer standpoint. Then they're trying to get loans, they're trying to get credit cards, they're trying to get credit lines, and they're not getting approved and don't know why. And the sad thing is, it's not because you don't qualify, it's because you just don't look legit. So you got to start right there. It's separating the business address, separating the business phone number, right? So we're separating our consumer and our commercial credit. We want the business to stand on its own, and we want to from us as consumers. So if we want that, we have to separate the business from ourselves. Right? We need an incorporator, we need an LLC, we need a separate address for the business, not our home address. We want a separate phone number for the business, not our mobile or house phone number. We want an EIN for the business. We want a website that reflects what we do, and a separate email address for the business, not an AOL or Gmail. We want a license for the business, a business bank account. There's 120 of these fundability factors that lenders look at. That'll give you the foundational stuff you need. If you've done that, you've set up a legitimate, credible business. And the most important point is that you have to make sure that everywhere your business is listed, the information is congruent. Believe it or not, that's the number one reason that loans get denied. More than half of all denials are because of this factor, because people do not look credible, mostly because their information doesn't match. Lender concerned about fraud, they go to validate the business exists from the application. They find Secretary of State data, other stuff. It doesn't exactly match. It throws up fraud concerns. It's the number one reason people are denied. So separating your business and then making sure it's all credible and then making sure it's all congruent, that's like spoon feeding any lender or credit issuer what they would need or want to even begin the process of starting to issue credit cap.
But how about it? I mean, again, speaking to the startup here, like we're lacking financial transactional data. So we've established the LLC, we got the phone number, we got the website, we've got the, the separate address that's not associated with our home address. We've got all these foundational pieces laid, but there's been no business conducted. You don't have any transactional history. You don't have a P&L that you can share with one of these lending institutions. So again, just what are they looking for then? I mean, surely you establish a credible business, but really you're nothing more than just a framework at that point in time. It's not a business that actually has any income at this point. And so help me think through that process. I'm struggling mentally of how a lender would deem that to be a very lendable business, given it has no income at the present time.
So we did step one. We made sure that we're credible, and we have to start there because so many people skip that and they don't understand why they're not able to get to the future steps. The next thing is that we really want to separate the terminology between credit issuers, somebody that's issuing credit cards, for example, and lenders. And there is a difference, because when we talk about lenders or we talk about loans and credit lines, way harder to get. So when I look at the pecking order of financing, then I look at business credit cards are the absolute freaking easiest thing you can get. Like, you don't need to show revenue, so it doesn't matter. You don't need P&Ls, you don't need balance sheet, you don't need revenue, you don't even need that. You don't need to have assets as collateral, and you don't need to have good credit. So with business credit, you're able to get it when you can't get other kind of loans. The minute we start to get into loans and credit lines, like I literally went right from a loan call, because we're getting like $500,000 in financing right now, to this call, right? Those lenders have all kinds of questions. They're asking about tax returns and P&Ls, and they're asking the questions about our balance sheet, right? They'll look at personal credit. They'll look at everything. So when you're trying to get loans and credit lines, they typically are going to look at one of three things: cash flow, credit, or collateral. They're looking at one of those things as a driver, or SBA looks at all three of those. Now, if we look at credit cards, they don't look at any of them. There's no collateral, it's unsecured. Okay, we know there's no cash flow, it's no doc. And if you're building business credit, you're getting a proof of credit based on your business credit quality. So knowing all this for a startup, the best place to start is to start building a business credit profile and score, because that's going to make it easier to get loans and credit lines. But you're also going to get these very high limit credit cards that you're able to use to fund the business. So once you set up the business where it's credible, the next step to your point is you want to start establishing some credit on your credit profile, right? We want to give the credit issuers, we want to give the lenders something to actually look at that legitimizes us, that says, hey, I want to lend to this person. So we can start that three different ways. The three ways to start a business credit profile is, one, we can use Dun & Bradstreet. They've got a product called the Credit Builder, and their Credit Builder will let you add 12 accounts you already have to your business credit reports. So whoever your CRM is that you pay, for example, you can add them as an actual trade line on your business credit report. So that's one way to kind of jumpstart the process, to start adding accounts to your DME profile using that product. The second way is through a program called Credit Line Hybrid. Now, Credit Line Hybrid is great for real estate investors, right? It's the number one product. So if I look at all the industries that we service, real estate investors, real estate agents are two of our top three. And the reason for that is that a lot of them are using Credit Line Hybrid to buy real estate, because Credit Line Hybrid, you're able to get basically credit lines up to $50, $100, $150,000 in credit lines. They're no doc, they're 0%. And then you can take the cash out of the lines, which is needed to buy real estate, right? You can't use a credit card to buy real estate, but you can pull the cash out and use it. So Credit Line Hybrid, if you have good personal credit, or a partner, a family member, a friend, anybody that wants to be a signer, you could use Credit Line Hybrid to get 5, 6, 7 of these credit lines. Then they report to the business credit reporting agencies, and that'll give you your initial trade lines. The third option is what are called starter vendors. And it's probably what 85% of those that build business credit do, including Sam Walton. And what starter vendors are these are vendors that will give you credit when you have none, but they report the credit to give you to a business credit reporting agency. Simple examples of them are Uline and Granger. Granger will give me a $2,500 credit line just because I have a business license. Like, I have a business set up, I have a license, they give me a credit line. So now what happens is I buy some things that I need from one of these sources, right? You can get marketing, you can get swag, office supplies. I mean, these starter vendors sell just about anything we need to launch a business, stuff we're going to buy anyways. Now we're buying it using the starter vendor credit, net 30 term, got to pay it back within 30 days, for example. So I get the credit, I use the credit, I pay the bill. Then what happens is that credit issuer, Granger in this example, will then report that credit to a major reporting agency like Dun & Bradstreet. And now when I have one account with Experian and one account with Experian or Equifax, 3 accounts with Dun & Bradstreet, that will create a credit profile. So now I have a credit profile. Now I have a credit score, and the credit score is good if I paid my bills on time or early. Now I have the basics of a credit history. Now somebody can pull my business credit report and see that I have people that I'm actually paying as agreed, and then that opens up the door for more and more credit to roll in. And from that point on, and I'll open up for questions before I get to the next point, the next point is that you are moving up the tiers of business credit building to get access to more different types and higher limit accounts till you get to the end of the process, which is about 4 to 6 months down the road.
Got it. Got it. Yeah. Backing up, there's one question I have related to, I think, the first step, getting just that initial business credit card. What is the average? I mean, I know that it varies across the board, but generally speaking, like the average that one might expect to get as far as a credit limit on that very first initial business credit card.
So if we
Once they've
look
established
at
their company.
if we look at Credit Line Hybrid, right? If we look at using good personal credit and a personal guarantee to get it, if you go that route, then it's going to mimic whatever the highest limit account you have is on the personal side.
But
So
no,
a real
how
estate
about not?
client,
How about not going that route? How about just purely not using any personal credit whatsoever?
1,000, 2,500 bucks.
Got it.
So think of it like this. In the consumer credit world, if I'm starting a consumer credit report with no other credit, we tend to look at secured credit cards. There really aren't secured credit cards in the business world. Vendor credit replaces secure credit cards. So I'm not getting a $2,500 secure credit card where I'm putting $2,500 down. I'm actually getting $2,500 worth of real usable credit at that vendor. Okay, so usually $1,000 to $2,500 is starter vendors. Once that credit, I get it, I use it, I pay the bill, I jump up to 5 to 10,000 on my next round of approval. So a lot of our clients are getting Dell 30 months into this, or 30 days into this process, and a month into this process, they're already at $10,000 limits.
Got it. Got it. Okay, perfect. No, that's great. I appreciate you sharing that. So the final and last step, what's that look like?
Well, the final and last step is kind of an ongoing thing. And what I mean by that is that you never stop building business credit because you never are going to stop needing access to money and applying and getting more money than you want or than you have. If we look at business credit, it's the only unlimited form of money you can really get for a business. If I go get a loan, there's a cap, or a credit line, there's a cap. Business credit, I can go get credit cards with every major retailer that exists, Visa cards, MasterCards, Amex, auto financing as well. So the next step is that you start applying and getting more and more credit. And usually at this point, weeks into this process, you're starting to get credit with major retailers. And almost every major retailer you and I know of offers business credit. I mean, Sam's Club, Costco, Best Buy, HP, Dell, Apple, Office Depot, Staples, Lowe's, Home Depot, even Macy's and Nordstrom. I mean, like your shop, like Sears, like your stores and malls even offer this kind of corporate credit. But what happens is I'm able to go to Home Depot at this point, and I'm able to say, hey, I want to get a business credit card for my business. And they might say, hey, I want your social to verify your identity, which is now required by the government. But I can tell them I don't want to authorize a personal guarantee or credit check. What Home Depot will do is now they're going to pull my business credit report. And if I have enough accounts on my business credit report to get Home Depot, let's say 5 accounts, then Home Depot automatically approves me based on business credit quality and nothing else. No cash flow supplied, no personal credit check. No collateral required. They're pulling my business credit. They see other credit issuers have issued me credit. They're seeing I'm paying those bills as agreed. Then the bureau is actually recommending I be lent money. They're even saying how much money I should be actually issued in credit. Then Home Depot's issuing me a corporate credit card in the business name, but did not require a personal guarantee. I didn't sign as a signer. It did not require a personal credit check. Personal credit quality doesn't matter. No inquiry on my personal credit check. I just got approved for that credit card based on what's on my business credit history, and I can continue this process. Getting credit at almost every major retailer, every fuel station in the country. Then when I have about 12 total accounts on my credit reports, now I can get Visa cards. Now I can get Amex. Now I can get MasterCard, what we call universal credit. Then I can also get auto financing. One of our clients literally got $350,000 in Ford the other day. $350,000 credit line at Ford, no personal guarantee, no personal credit check, literally used it to launch his own Turo business. Went in there to get a car for himself, launched his own Turo business because the credit line's so big. So that shows the potential of where it becomes at that point.
Interesting. I was going to ask that client. I mean, do they have like an HVAC company where they need like company service fans or something along those lines?
Went in to get a vehicle for he's in the construction trade, one vehicle. And the credit, it's interesting because a lot of our clients become partners and offer business credit financing as a service. So the finance manager became his client, which I love those stories when the finance manager becomes the client because he's like, I've never seen this before. The guy legitimately went in. It was cool because he was in our Facebook community sharing this whole journey, went in to get one vehicle, then came back and said, what would I do with the $350,000 car line? Launched his own Turo business, rental car business on the side, and then like blew this up into like a 7-figure business. So, but it's interesting because I see a lot of those stories in our community because people come and get considerably more than they think. And then they're all like us. They end up venturing off and starting 2 or 3 different businesses using that business credit to be able to fund their way.
So it sounds like there's surely a lot of moving pieces, at least to do this correctly and to do it efficiently. I mean, what do you guys have services or advisory services that help kind of hold hands along the way? Again, you just outlined there's kind of like 3 phases, but in each one of those phases, there's a multitude of steps that, just again, and they have to happen in sequential order in order for this to be effective. So, I mean, talk to me about your services and what you provide folks.
Well, I appreciate you asking that because one of the things that always drives me crazy about podcasts is that it seems simple when I explain it, but really there's a lot more into every single step that's involved. I believe in 2 paths, a free path and a paid path, because I've been broke as you could be after the mortgage crisis, right? So we have a ton of information on our YouTube channels and social channels. I just finished a 45-minute live stream breaking down in depth exactly what to do. So there's a free path where somebody can kind of use the do-it-yourself training. And then we've got a fundability system. So we have our own system called Fundability that integrates with the business credit reporting agency. It actually tells you your fundability score, the likelihood that you're actually going to get approved for funding, shows you what's wrong, shows you what to fix, and one click you can fix those things. And and watch your fundability score increase, become more fundable. Then we walk somebody through a business credit building step by step. We take where they are now, user data and reporting data, and then we only show them all of the sources they're able to get now. Here's 100 business credit cards you can get based on where you are in the process. And then they can go right through there and apply to be able to get approved. And then our fundability system also takes all their data and then maps out all the financing, the loans and credit lines they can qualify for, even identifies what they can't qualify for yet, and the one simple or two simple things they'd want to do to be able to qualify for that kind of funding. And then our fundability software comes with or without coaching. So a lot of our clients are moving forward with an actual advisor and coach to help them with the software through the process.
Got it. And like the timeliness of all this, I mean, again, I know there's different levels that folks might want to get to and take this to, but I mean, just how much could really be accomplished in a year span of time if someone follows all these steps?
So we have clients that surpass $1 million right about in a year. A year in, they're getting $1 million in real usable business credit. The only limit to how much somebody gets is how much they're applying for and using. Yeah. You know, the business credit system is not going to work if you go out and get 10 credit cards just to get 10 credit cards.
Them. Yeah.
You got to use them, you know, and what's interesting about business credit world is the more you use, then the higher your future approvals will be. So if we look at your business credit report today, it won't show your limit of your credit cards. It'll show the recent amount of credit you've used. So the business credit reporting agencies are saying, hey, look, like what's most important here is that you get it and you use it. And the more you use, your higher your future approvals will be. So somebody that really gets it and gets involved, and they're actually, you know, let's say you're real estate, you're coming in, you're buying credit line hybrid, you're buying the properties, you're adding these high limit used accounts on there. Then you're coming in, let's say you're doing STRs, you're dealing with short-term rentals. Then you go buy all the furniture, all the furnishings and everything, and you're using the credit. I mean, when they show all of this credit being used, then you start getting $10,000 to $20,000 limits about 30 to 60 days in the process. Then if you're getting more and more and more credit, it's not hard to surpass 300 to 500,000, even $1 million in a year. It just depends on how much credit you're actually going to get and use. So our clients get initial approvals in week 1. They're to the end of the process, universal credit and cash credit or universal credit auto financing 4 to 6 months in. And they're usually well above $500,000, $1 million by the course of a year.
Is it's TransUnion, Experian, or Equifax? They're not involved at all in the business side of things, correct?
TransUnion isn't. Equifax and Experian is. So Equifax and Experian has a commercial, and then you've got Dun & Bradstreet. To give you an idea, D&B is 230 million records on file. Experian's 23. So like D&B is, you know, gigantic in the space. Experian and Equifax are there, but they're small players. But they all matter because lenders like to look at your Equifax business report. Credit issuers really like to look at Experian. Insurance providers, everybody else really lean on D&B. So you really want to build credit across all three because, you know, a lot of different sources are looking at each individual of those for different reasons.
Got it. Well, good deal, Ty, man. This has been incredibly informative. For those that want to learn more, they have an interest in your service, different things that you provide, where's the best place to track you down and get more info?
We've got a great step-by-step guide. It gives more vendors, more information on fundability, even more details on the steps at creditsuite.com/EIN. That's creditsuite.com/EIN. That thing's been downloaded well over 1 million times. So I think the most downloadable business credit guide that exists. And it'll map out the steps for your audience to be able to get in there and start getting results right away.
Good deal. And then your website, they can, get a better understanding of the services. They can make an appointment and get in contact with someone.
Sure. Right at creditsuite.com. Tons of free information there. We have a lot of resources, including a regular blog that ranks really high in a lot of the searches. Our own podcast, which is now we're getting near 900 episodes on that. One of the top ranked financial podcasts.
I love it.
Yeah. So all the resources they need are right there.
Awesome. Ty, man, as always great talking with you. I appreciate you coming on the show and sharing all of your valuable insights, my friend.
You're the best. Thanks for having me, Kevin.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care.